Welcome to today's Trader Days on Signal. And finally, this in the midnight, our last week trade hit TP, and that's massive 1 to 5. And the trade did hit our 1 to 5. Even though in our last trade, I did make what is it called? I stop our trade at one exactly 1 to 3. Yeah, and that gave us really 1 to 3 on last week Friday. So, but this morning when market opened, you can see that we just our market just hit 1 to 5 directly. Even though I do trade 1 to 5, but I see that it's a long trade, and at the same time I just simply target this high, not waiting for the other something. So anything can happen in the market, then we have to just close out that level. Even though I like rigid 1 to 5, but with the way market is doing, and I just decided that okay, let's go for 1 2 in case we get to this high and the market decide to just reverse. We can just take the liquidity above this high. Market can just continue to do what to come down. So and that's the reason I put my take profit at this high just in case, so that at least we'll be able to secure and weekend is coming and anything can happen when market open. So I didn't know that we're going to even hit the TP on that Friday, that 1 to 3 something. But waking up this morning and coming to charts, I found out that we even did 1 to 5. So in my journal, I recorded 1 to 5 for it, because we are experimenting with we are all our trades, everything in trading is experimenting because you never know what's going to happen. Can never determine anything can happen in the market, and you have to accept that reality that anything can happen in the market. There is nothing that cannot happen. So you can blow your account, our account can be blown, or if you use proper risk management, you will be secure anyway. So here we are currently in the market, and the last trade I gave coming from this inverted internal structure, then I later discovered that okay, I did talk about it on during my last something on Friday. I talked about the level, pick the level here, which is our set to buy level coming from 15 minutes. You can see that set to buy there, and it is a proper. In fact, it gives us a nice reaction from that level. Or I was anticipating that okay, maybe this particular leg here is going to be properly mitigated. Maybe it's going to turn back to. But as you can see, this level here did just continue to give price into the eyes. So since this level has been properly mitigated before going forward, then automatically we have to take out this trade here. It's no longer valid. The reason why we entered the trade was because of the inverted order block here. But we have easily used this candle here, this buy to sell. I mean, this candle here, inverted order block. I have in this level. Even this particular candle here is a nice, what is it called? It's a nice trade. A nice trade. Since we've hit TP and our expectation has been met on the markets, and I talked about this yearly high, previous yearly high, that it might be taken out of the something before we continue to before any retracement can happen. And we can just continue to go into the highs, or at the same time, this is the previous yearly high. And I guess that's the target, that's the draw on liquidity that the market is targeting. And maybe once it is taken out from in the market, then we can be anticipating some kind of maybe deeper reversal or anything. Because personally, with the way market is trading, I believe since last year, closing of last year, with this massive consolidation in the market, I kind of believe maybe the price of Euro USD is somehow pegged because market was just ranging and throwing wicks, as you can see, from all these levels, and a lot of accounts were buried in between these legs here. So even though last year I made something to market that we might actually take out all these levels in the market and all these highs. Now I talked about all these levels that we might take them out, but as you can see, the prices is very, very high. That's 1.6. And we don't know for price to get to all these highs and take them out, a lot of things that would have happened in the world. Because, the trade by reality. Yeah. So, even though we use technical analysis, we still follow fundamental somehow. So what we're going to do is just to take out all our annotations, try to redo our analysis. Let's go to effect CM, and even this trade give proper 1 to 10, and that's massive. So we're going to remove all annotation, and we're going to start the market afresh. So without wasting time, if you go on monthly, you can see both low and high of the monthly candle has been closer. What do we do on monthly? Monthly is just for us to, put into something our open high low close. But the market is trending, and today is 26. So here we are in the markets. I have this level here. Let's just take this level, this internal structure level, and that's where we can be anticipating some kind of price getting into before going into the highs. Okay, so both high and low of the something has been taken. Now another thing we can see, the next draw on liquidity is this uh, previous yearly high. So previous yearly high, and once it's taken out, then we can just continue to move into the highs. We can continue to move into the highs, or we can move from there. So we have this high in place, this previous yearly high, and this particular level is just to identify this internal structure that has been created, and we are reacting from this other block here. And price can continue to go into the high. But what we will basically do on higher time frame, which is monthly and weekly, is to pick our open and low close. And as you can see, this is a massive that block in place on weekly. When we check monthly, it is our internal structure. But if you check weekly, it happens to be a very, very massive that block in the market. So this year can be a very, very massive year that we're going to have very, very high market something. So um oh the next thing is for us to go to daily. There is proper mitigation of this level here. There's proper mitigation of this level. We will start using our structure from the this level is properly mitigated. These are next strong high, strong low in the market, and without stressing ourselves, here happens to be our weak high where we'll be targeting, where we believe price would like to take out. But before that, there will be a closure of this particular level here. Must be a closure of this particular level here. So there is a gap here, and that's the reason why I don't want to use forex.com, because it did not give us, it won't reveal that gap to us. So there is a gap, opening gap. There is opening gap here. So having these two levels, we've established our structure. Here is our strong low. We expecting price to protect, and here is our stronger. Don't forget our internal structure from monthly another block on weekly. But we are what is it called now? We are trading within this level. Establish our range, our daily range supposed to be, and the 50% of the something lies here, and mitigation block for this range happens to be this particular level here. and that will be our dealing range. So can be anticipating, and for us to buy, we're expecting some kind of movement from this particular level here. Then there is another thing that caught my eyes just now, which happens to be this particular level. So we're going to go on 4 hours to try and see where we can pick our daily range from daily. It happens to be here. But from 4 hours, as you can see, it happens to be this particular level here. We have this break here, this gap, and this internal structure from this level here. So the first level of things is we want to buy from our, I mean, below 50% of our daily range. There is proper mitigation of this particular level because this fair value gap, this fair value gap has been properly mitigated from this level. So we have picture. It's properly mitigated. There is proper mitigation. If we go on lower time frame, we're going to see that there is proper mitigation of all these levels going forward. And we have the 50% of our something from daily to year. But if we check on 4 hour, if we are going to establish our daily range on 4 hour, it's going to be from this particular level here. So we have this leg. If we are establishing another daily range of what is it called? Consider it line perfectly with our internal structure on on monthly and weekly order block. So that's the 50%. Go on lower time frame. What can we see from the 50% line below these levels here? And anything can happen from the market. From what we are seeing here, our weak high has been established already. And we have this level, there's proper mitigation of this level. We are expecting price to continue to do what? To come lower. So there is a gap here and lines perfectly with this level, and this particular leg can be draw internal liquidity that will be generated and taken. So if I'm going to be taking any long-term trade from this particular level, I'm going to be picking it from this 50% of the 4 hour because it lie perfectly with our monthly block, both monthly and weekly block. And from daily, we're just going to be taking it and putting into consideration this internal structure. So yeah, if I'm going to be taking any trades, it's going to be from the 50% of this range, which is below a long position, will be below and underneath this internal structure on 4 hour. So, and that will give us 36 pips in the market. So, so if it give us 36 pips, that's 316 times 5, which is 180 pips that we can still be expecting in the market. So that'll be 1 to 5. And you know, I'll be buying from the 50% of this daily range. That would be my something. That would be my aggressive entry anyway. And don't forget, pick this internal structure, the 50% of the 4 hour one. 40, if we still put it like this, is still something. Let's check it on 50 minutes. Okay, okay. There is proper mitigation of this level. But this particular leg to this leg here, there is no proper mitigation, but on lower time frame we might have it. But this fair value gap that was created here, I believe is giving us, and this imbalance might be filled. And from this level, I'm not expecting price to close above this high before it comes down. And the imbalance gap has been so. I still believe this level here. So this is the trade I'm going to be going for. And conservatively, I'll be coming on lower time frame from this level to do what? To pick my lower time frame trades. But from 1 hour, I mean, from 4 hour aggressive entry, I'm going to be using this level here. Let me mark it out from this level to this level to this internal structure. So that will be our, we'll put it as internal structure strokes 50% of the daily range. So that will be our trade, our aggressive trade that will be anticipating at least for this week. I will try and see what price is going to do from that level, and we can close above this high. So anything can happen. You just have to minimize your risk. Personally, I'm minimizing my risk too. I don't want to be too optimistic. I just want to stay neutral in the market. So I guess that will be all without doing over analysis in the market. So this will be our trade. Be careful in the markets. Use proper risk management. Don't forget anything can happen in the market. So have a lovely and a profitable day. Thank you. God bless us all. Bye bye.